Hey guys, it is Julie here with JT Wealth. In today's video, we are taking a look at what stocks Cathie Wood thinks are going to have the next Tesla-like returns. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, today we are going to take a look at which sector of stocks Cathie Wood is expecting to have Tesla-like returns from over the next few years based on an interview clip between Cathie Wood and Bloomberg. We're going to take a look at how ARK views these disruptive companies and how traditionally they can be difficult to value. And then we're going to take a quick look at ARK Invest's top stocks in this sector and just an overview of what these companies do. Just before we get into all of that, this is just your friendly reminder that if you enjoy today's video, make sure you hit that like button and leave your thoughts in the comments down below. Also, if you enjoy free stocks, don't forget to check out some of the links in our description. Right now, Webull is giving away 4 free stocks for signing up and funding a new account, so make sure to check them out. All right, now let's start off by hearing from Miss Cathie Wood herself.
Well over 100%. It should double plus in the next 5 years.
Yes, we expect more than a doubling in our portfolios over the next 5 years.
If I look backward, as you well know, Tesla accounts for almost a fifth of the return that you have generated in that 5-year time span. Which of your current holdings, Cathie, do you think will supply the biggest lift in the next 5 years?
Tesla's still in the running, but I would have to say the biggest upside surprises are going to come from the genomic space.
So there we have it. Not only do they expect their ARK Invest ETFs to more than double in the next 5 years, they expect a lot of that growth to come from the genomics sector. So from there, I think it makes a lot of sense to take a bit of a closer look at ARKG, or the ARK Genomic Revolution ETF. Now, companies within ARKG are focused on and are expected to substantially benefit from extending and enhancing the quality of human and other life by incorporating technological and scientific developments and advancements in genomics into their business. The companies held in ARKG may develop, produce, or enable CRISPR, targeted therapeutics, bioinformatics, molecule diagnostics, stem cells, and agricultural biology. Now, before we get into some of the top holdings here in ARKG, I first want to take a look at how ARK values these disruptive companies and how they try to capitalize on the adoption curves of innovation. Starting at step 1 there, innovations often have long, flat adoption curves as there's a lack of understanding which delays their embrace. During this phase, short-term price movements often reflect volatility more than a stock's underlying value. So ARK seeks to identify the true market potential of innovative companies. At step 2, the performance often declines during the gap between the early adopters and mass market acceptance. The market tends to overestimate impacts of short-term events and to underestimate long-term market performance. ARK works to recognize firms that will cross the chasm to large, rapid growth. At step number 3, many truly innovative products and services are platforms in the winner-takes-most markets. ARK looks for platforms of innovation that cut across sectors for maximum potential upside. And at step 4, as companies realize the commercial successes of their innovations, they must continue to evolve and differentiate. ARK monitors if a company is reinvesting in future opportunities and identifies possible disruptors. Now, it is no secret that ARK's ETFs have performed incredibly well this year. And when we look through some of these top holdings, I want you to pay attention to what the analysts have to say. As many agree a lot of them are good buys, they can differ on their long-term outlooks and how they value these disruptive companies compared to ARK. So here we have the top 10 holdings of the ARKG ETF. And in today's video, we are going to take a closer look at Pacific Biosciences, Crispr Therapeutics, Twist Bioscience, and CareDx. And yes, I know I am skipping Teladoc, and that is only because we are focusing on more genomic-related companies today. I think Teladoc is a great company. I have done videos on them before, but they are more focused on telehealth versus the genomics that we're looking at. So first up is Pacific Biosciences of California. They trade under the ticker PACB and are currently at $25.94, making them up over 1,000% since their lows back in March. Pacific Biosciences' mission is to transform the way humankind acquires, processes, and interprets data from living systems through the design, development, and commercialization of innovative tools for biological research. They have developed a novel approach to studying the synthesis and regulation of DNA, RNA, and protein. Combining recent advances in nanofabrication, biochemistry, molecular biology, surface chemistry, and optics, Pacific Biosciences has created powerful technology platform called Single Molecule Real-Time SMART Technology. SMART technology enables real-time analysis of biomolecules with single molecule resolution, which has the potential to transform the understanding of biological systems by providing a window into these systems that has not been previously open for scientific study. There are 3 current analyst ratings on Pacific Bioscience, and it comes in as a moderate buy with 1 buy rating and 2 holds. Now, the average price target is $16.33 for about a negative 37% potential downside. Next up, we have Crispr Therapeutics. They trade under the ticker CRSP, and at $153.11 per share, they are up about 350% since their lows in March. CRISPR is a specific, efficient, and versatile gene editing technology that they can harness to modify, delete, or correct precise regions of our DNA. Dr. Emmanuel Charpentier, one of their scientific founders, co-invented the CRISPR gene editing. Until then, people knew CRISPR only as an acronym of genetic information that some bacterial species use as a part of an antiviral mechanism. Now, as a gene editing tool, CRISPR has revolutionized biomedical research and may soon enable medical breakthroughs in a way few biological innovations have done before. So CRISPR edits genes by precisely cutting DNA, then letting natural DNA repair processes to take over. The system consists of 2 parts, the Cas9 enzyme and a guide RNA. And there are 3 main categories of genetic edits that can be performed with CRISPR. The first is to disrupt with a single cut. The second is to delete a larger fragment of DNA by using 2 guide RNAs. And the third is to correct or insert by adding a DNA template alongside the CRISPR machinery, allowing the cell to correct a gene. CRISPR has 16 analyst ratings on their stock, and it comes in as a moderate buy with 9 buy ratings, 5 holds, and 2 sells. The average price target is $136.15 for about 11% potential downside. But on the high end, they do have a $180 price target, which would be about an 18% potential upside. Third, we have CareDx Incorporated. They trade under the ticker CDNA and are currently at $72.45 per share, and they are up over 400% from their lows back in March. Now, they use their genomic science in relation to transplants and are committed to improving transplant patient outcomes by providing innovative and intelligent solutions throughout the entire patient journey. So CareDx is a leading precision medicine solutions company focused on the discovery, development, and commercialization of clinically differentiated, high-value healthcare solutions for transplant patients and caregivers. They offer products, testing services, and digital healthcare solutions along the pre- and post-transplant patient journey and are the leading provider of genomics-based information for transplant patients. CareDx has 5 analyst ratings on the stock, and they actually all come in as a buy rating. But even as a strong buy, their average price target is $67.60, which represents about a 7% potential downside. Next up is Twist Bioscience Corporation. They trade under the ticker TWST and are at $141.29 per share, and they are up over 600% from lows back in March. Twist Bioscience developed a proprietary semiconductor-based synthetic DNA manufacturing process featuring a high-throughput silicone platform that allows them to miniaturize the chemistry necessary for DNA synthesis. This miniaturization allows them to reduce the reaction volumes by a factor of 1,000,000 while increasing throughput by a factor of 1,000, enabling the synthesis of 9,600 genes on a single silicone chip at full scale. Traditional synthesis methods produce a single gene in the same physical space using 96 well plates. They have industrialized the production of cost-effective, high-fidelity, high-throughput DNA, which is delivered to their customers via seamless online ordering. Twist Bioscience also recently launched gene fragments for clone screening. So they launched their clonal-ready gene fragments with and without adapters that can be used to build constructs and minimize the time and cost of screening for perfect clones. They are also seeking to expand their manufacturing and commercial capabilities with the addition of their Factory of the Future just outside of Portland, Oregon in Wilsonville, and the factory is expected to become operational in 2022. And currently there are 3 analyst ratings on the Twist Bioscience stock. It comes in as a moderate buy with 1 buy and 2 holds. Their current price target of $108.33 would be about a 23% potential downside. Now, as a bonus honorable mention here, I'm going to throw in one more stock that I know everybody is pretty excited about lately, and that is BioNano Genomics. Trading at $3.08 and actually just above the $4 mark in the aftermarket, BioNano is up over 500% just in this last month. They focus on genome mapping, and their Sapphire system is a genome imaging tool for high-speed, high-throughput, and structural variant detection and analysis with exceptional sensitivity and specificity. Now, we did just recently do a video covering this stock as it has gotten so much excitement around it lately, as analysts say that this could really be a game changer, and many are speculating that it would be a perfect fit for ARKG's ETF. As far as their price targets go, the average price target is $1.42, over a 50-cent potential downside, and that's just from that $3 price point. And that gap in price target will probably only widen come Monday, as there's been so much hype around this stock, it is bound to shoot up a bit further. So you may be wondering, why are we showing these stocks if all of these analysts think that they only have downside in their future? Well, to be honest, I think these analysts are just a bit behind in how they're valuing these companies. And it all comes back to that valuation we showed at the beginning and how ARK looks at these disruptive companies. Even after all of this massive growth this year, those companies still hold top positions in their genomics ETF. So I think it's just a matter of time before the rest of these analysts maybe catch up and change how they are valuing some of these disruptive companies. Now, personally, I certainly wouldn't mind doubling my holdings over the next 5 years, so I will be taking a bit closer look at these 5 companies, or also just taking a look at buying the ARKG ETF. Of course, these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Always ensure that you are doing your own research and due diligence before making any investment decision. If you made it to the end of our video here, make sure you give us a thumbs up and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a wonderful day, and cheers.